We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
These are volatile times in the stock market.
Market's up 200, then it's up 800, it's up 700.
How do you get the facts when investing?
Hi, I'm Phil Grande at philsgang.com. If you're confused about the stock market, get unconfused. Go to my site, philsgang.com, and listen to my radio show every weekday at 3 Eastern. What is the market going to do? We know exactly what the market's going to do.
Phil's got the answers at philsgang.com.
There's no need for you to be losing money.
Check it out, philsgang.com. As the new year approaches, make a resolution to challenge yourself to become the best investor you can be. Phil Grande can take your trading to a whole new level. Innovative stock market investing tools and the experience of over 50 years combined to give you the edge in controlling your financial future. As a Phil's Gang member, you're taught the essential strategies of investing using stock charts, training videos, and seminars. It's information Wall Street doesn't want you to know. Learn more at philsgang.com. philsgang.com. Want good investing advice from someone you can trust? Listen to Phil Grande.
With what's going on today in the economy, especially in the stock market, it gets really complicated, but it doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grande at philsgang.com. When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's Gang.
When I started this, they asked me, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Want good investing advice from someone you can trust? Listen to Phil Grande.
With what's going on today in the economy, especially in the stock market, it gets really complicated, but it doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grande at philsgang.com.
Hi, I'm Phil Grande at philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And welcome to the Phil's Gang podcast. Okay. Every Friday I do my podcast, but remember, every day you can go to my YouTube channel where I do what they call longs and also these shorts, these little segments. So you got every day I do those. So you can go to those and you get some great information. Okay, and then I do my radio show on Friday. But don't forget to go to the YouTube channel and to Instagram. Okay, and when you go to YouTube channel, please make sure you hit, like, subscribe, okay, share. All right, let's get started. Stupidity. Yeah, it's stupidity. Why am I saying that? We get a 2,000-point drop in the market. And then it started last week. And then yesterday, we get this rally saying, oh, everything's okay again. What? So let's go back a little bit. What have we been hearing for the last year? We've been hearing this kind of, excuse the language, bullshit. Listen to this.
I think the economy is doing exceedingly well. In fact, thinking about it, we're as close to fulfilling the Fed's dual mandate.
This guy is a total a-hole. I mean, give me a break. This is what we've been hearing for a year. And then we've been hearing this. This is what really gets me.
I would say the labor market is still reasonably healthy. I would say
that's they've been using the labor market's healthy for a year, and using that as an excuse to, well, you don't understand, the labor market's healthy, and that's why the economy's so good, and that's what's holding this market up to labor market. And it's been total BS. It hasn't been healthy. And then finally, the truth comes out because Jared Bernstein at the White House, who is the president's economic advisor since he's been vice president, is a liar, and he just couldn't mask the lies anymore. When last week we got a 1,000-point drop on Friday because all hell broke loose because he couldn't fudge anymore how terrible the economy is. The unemployment rate went from 4.1 to 4.3. So that's not bad. No, 4.1 to 4.3 in the stock market. That's like somebody building a bridge, okay, 20 miles long, and they missed the other side by 19 and a half miles. That's huge. Huge. So last Friday, we get more people are signing up for unemployment than ever. People are losing their jobs, and we drop 1,000 points. And then we also get something else that's hurting this so-called buy on the dip. Remember, this whole crap yesterday, hey, things are okay. We lost, or fewer people are signing up for unemployment than last week. This is good. And so the market starts to rally on that crap. Are you kidding? It's better than last week? First of all, you don't measure that way. That's how it works. You've got to wait for the whole month of September to get finished. At the end of September, then we can compare. Then we can see what the strength of the labor market. So they go from last week to this week, and they get a little blip, and we're no longer in a recession. But we're right. We're not in a recession. We've gone from inflation to recession to stagflation. You're right. We're not. Things are worse. We're into stagflation. But they're not going to tell you the truth, just like they haven't been telling us the truth about the labor market for a year. Because, again, think about this. When they keep telling us how strong that labor market is, underlying that is like quicksand. Think of the jobs the president lost just lately. 1.8 million full-time jobs replaced by, I think, 1.2 million part-time jobs. Strong? And the other problem we had last week with the market, or we had with the problem last Friday, dropping 1,000 points, is because every time we have a pull back in the market, all they have to say is buy in a dip, buy in a dip. And what do we depend on when they buy on the dip? We get these big rallies. Matter of fact, when you get a sell-off, usually when they buy in the dip, you get most of it back. Why? Well, they don't explain it to you. The reason why you get most of it back, because who's in there buying? Hedge funds. Because they have a ton of money. Where's their money come from? The hedge funds go to Japan and they get money at zero rates, and they take that money. It's called the carry trade. They call themselves the carry trade. That means they go to Japan, rates are at zero, buy the money, carry it to the United States, and they buy stuff. They buy assets and bonds and deals. And then all that money goes into the stock market, a lot of cash. And then when they say buy on the dip, they're in there buying. They're leading the buying because they got to do something with their money. They don't go start a savings account somewhere. They don't start a Christmas club. They got to do something with the money. But this time, they got screwed. Because this time when the truth came out, the reason why we dropped 2,000 points, because every investor, the smart money, they knew the hedge fund guys were not going to be there for buy on the dip. That means we were missing a tremendous amount of cash in the market to buy on the dip. We could always depend on them coming in, buying on the dip. If you lost 1,000 points, you'd buy on the dip, you get 800 points back. Couldn't do it this time. They weren't around. They're gone. That's what makes this serious. So yesterday they come out and they go, oh, gee, look at this. You know, not as many people signing up for unemployment checks. Isn't that great? And then nobody asked, well, wait a minute, what's going on with this rally? What's going on with this rally? Farts are larger than this rally, for God's sakes. This thing is a nothing rally. What the hell's going on? No, nobody asked. Nobody asked. This is a horrible rally. Look at the volume. In fact, go back. Let's go back to, let's see, 1, 2, 3, 4, 5. Let's go back to Monday. That's when we had that. When we had that, let's see, was it Monday? Yeah, let's go back to Monday. I got that date right. Is that Monday right here? Let's see, that is, I think that's Monday. Okay. So look how the volume started to fall off. Look how it's falling off. It's going the opposite way. We're rallying, but the volume is falling off. And look at the other thing. Look at the red and yellow line right there. See that red and yellow line? That's telling you money is coming out. So as the stock goes up, and notice on my chart, mine are color-coded. We design our own charts. We don't buy some generic charts. These are our charts. We developed these 25 years ago, and these have been time-tested for 25 years. And look, they went up red. Why are they red? If you look on your chart, you'll have green candles. Why are they red? Because it warns you, if you jump in and buy on the stock, you buy on this buyback or on the dip, It's warning you. You could buy the stock. Let's say you buy NVIDIA, and you bought it at $90, and the next day it's up at 100, and then it's up the next day 104. What it's warning you, that morning you could wake up and it's back down to $85. You see. So the bad thing is the hedge funds are not in this stock buyback. So this rally stinks, but nobody's talking about it. Nobody's talking about it. So again, let's go back and review what happened. So last Monday, okay, we get this bad news, and then we had, Friday. Remember, it started on Friday. Last Friday, August 2nd, we had 71,000 less jobs than they thought, okay? And the unemployment rate went from 4.1 to 4.3. And so, boom, down 1,000 points. Monday morning comes, right? And normally on Monday morning, you'd always see where it says implied open, positive 35 or 65. Ever see that? Ever notice that on the bug? It says implied open. Go to like CNBC, it says implied right. It's a little green box to the right. It's always, the market could go down 5,000 points, but the next morning it always say implied open, positive 35, 65. Who's that? That's the Federal Reserve. That's the plunger team early in the morning. And what they do is go buy futures so that they can churn the market up to make it look like it's going up just before the opening. Well, Monday morning came and it was still down. Now you know there was real trouble. Why? Because the hedge funds aren't there, because that carry trade is dead, over. So now we go on. So now that was Monday, and then the market keeps on dropping, right? So then yesterday they come out and they say, we made a mistake. Things are good. I'm sorry, we made a mistake. We're not in a recession anymore because not as many people signed up. Well, that didn't work out well. So here we are now, okay, a week later, market's down. There's no carry trade. The stock buybacks stink. There's more, and if you look at volume, it's going down instead of up. And here, take a look at this chart right here. Let me show you what's going on. And I'll tell you exactly what's going to happen. So, remember what started us in this downtrend, okay? This is the S&P. See it right here in this chart? This is the S&P. What started this first drop, okay? The first drop in the S&P started again when NVIDIA on June 20th, when it hit an all-time high at $140, the next morning, it opened down. It broke the day before's high, opened down. Okay? That was the end of it. And then I said, that's it. And then people came in to buy in a dip, and I said, look, don't buy in a dip because it's not going to make a new high. And it didn't. And then it turned around and started to drop. And then when the market started to drop, everybody said, get out of the chip stocks. Get out of NVIDIA, get out of the tech stocks, get out now and buy Lazy Boy chair, buy Coca-Cola, buy Pepsi. After 15 years, they're telling you to buy a Lazy Boy chair and get your big fat butt in the chair in your belly and suck down a Coca-Cola. Are you kidding? This is what people are doing, buying Lazy Boy chairs and Coca-Cola. That's not going to work. I said they're going to come back in and they're going to go back and buy tech stocks. Why? Because they're addicted to tech stocks. They're addicted. The people who've been buying stocks, they got into this AI craze. They never been through a crash in the 70s. They never been through 1987. They've never been through the dot-com crash. They have no idea what the hell a crash is. They have no idea. So they start jumping in and start buying tech stocks. And I predicted they would. And I said, then it will drop again. It formed a lower high. See it on my chart? You got the high, pulled back. I told you they'd get their butt out of the Lazy Boy chair, and then they'd go buy tech again. And they did, but it didn't work. It didn't work. Of course it's not going to work. Okay? So then all of a sudden, that's when we get the notice, hey, guess what? We've been lying to you for 2 years now, telling you how great the labor market is. We can't lie anymore. This is Jared Bernstein. We can't lie anymore. We are in deep doo-doo, man. We can't lie. Things are so bad. The labor market sucks so bad. And boom, we go down 1,000 points. Next day, boom, another 1,000 points. Then yesterday they tried to pull this crap off. Oh, but things are a little better now. Recession's all over. We only had a 2-day recession. That didn't work. So now what's going to happen is this. We're going to rally, and we're going to fail again. That's right. You see this downtrend? Nobody's talking about it. The market is in a downtrend cycle. Look at it. Those are called lower highs, but nobody's going to tell you that. We tell you that, but nobody else is going to tell you that. And if J.P. Morgan, we got him out of the grave, he would tell you that we're in a downtrend chain. And if everybody is buying on this dip, they're out of their minds. So we're going to rally some more, stop, then we're going to come down 13%. And then we're going to go from 13% up to we're going to be trading probably from around for about 490, I would say, 490 the S&P to about 565. We're going to be in that range between now and election day is my guess. More when we get back. This is unbelievable.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil. Give us a call, 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. Unbelievable. The line has been going on, and now it caught up to them. It caught up to them. So here, listen to this. This is Bernstein. Now Jared Bernstein, remember, this is the moron who he's the head of the, he's the economist for the president. And this guy doesn't have any degrees at all. Accounting, no degrees that would make him an expert in accounting. He has a degree in he got a degree from the New York Music College where he knows how to play a trombone. I'm not kidding. He took an exam on how to play a trombone and then he passed it. And so he plays the trombone, he passed an exam, he got a what do you get? You got a bachelor's and a master. He had a bachelor in trombone and he got a master's in drums. Then he got another degree from, they sent him over to Harvard and he got another degree, or I think it was Harvard. He got another degree in social, whatever the hell is, science or whatever, where he goes in and he does what Obama did. You graduate and then you go and you organize neighborhoods. Yeah, and this is the guy who's telling the president what to do when it comes to the economy. So here he is. Listen to this.
I don't see recessionary signals coming from some of the most important indicators out there.
He wouldn't know an indicator if he tripped over it. This is the guy they asked him, let me ask you a question, Mr. Bernstein. Why on God's earth are we borrowing money when we can just print it? He didn't know how to explain it. I think we got that cut. Do we have that cut somewhere? Okay, so he couldn't answer that question. He said, and it was a fair question. The question was, why the hell are we borrowing all this money? Why don't we just print it?
There is no question that the government prints money, and then it uses that money to.
This is not a joke. He couldn't answer it. So now he's telling us. Now all of a sudden he's a genius, and he understands what a recession is. He don't even know what a recession is. So then, listen to this. The Powell comes in.
We're certainly very well positioned to respond to weakness with the policy rate at 5.3%.
What does that mean? We're ready to respond to weakness of 5.3%. What he's saying is we can start dropping rates. You can't drop rates. Here's what you do. Make sure you go and watch the 2-year Treasury. I'm going to put this up for you. I did this special for you. Let's see if I can find it. Let's see. Right here. This is the 2-year Treasury. See it right here? Okay. So let me explain something to you. When you see this 2-year Treasury yield going down, that's not good news. That's not, oh, gee, they're cutting rates, so the market's going to rally. No. When the 2-year Treasury yield goes down, it's telling you the economy is in bad trouble because you don't cut the 2-year Treasury yield. You don't cut it if the economy is good. You do it because it's bad. And when you do it because it's bad, that's when you get crashes. That's what happened with the dot-coms. The same thing happened. The 2-year Treasury yield went down. So as the dot-com was rallying, okay, and interest rates were low, and then we got into all that same crap we're into now. They said, oh, look, this is good. They're going to start cutting rates. So you start seeing the 2-year yield go down. And I said, short. The dot-coms keep shorting because it means they're in trouble. And sure enough, dot-com crash. Same thing when we hit the housing financial crash, right? Remember 2009? Same thing. This yield right here tells you when it's going down, they're going to cut rates. It's always truthful. It's going to cut rates, which means they're admitting the economy sucks, and that means the market's going to go down. So by him telling you this, that's a bold-faced lie. Unbelievable. Now listen to this.
We still think the underlying fundamentals of the economy are sound.
What's he talking? Nobody uses fundamentals anymore. Nobody buys stocks on fundamentals. Remember, the stock market, yes, once it was driven by fundamentals. And it was driven by price discovery. But that was changed when Obama and Bernanke decided that they were going to go to QE, zero rates, in 2008. So no more was the market driven by fundamentals. No more does anybody care what the trailing PE ratio is. Nobody cares what the PE ratio is, price to sales, price to book. Here's one, return on assets, return on equity. We used to watch that like a hawk because then we could identify how management is doing with the company by looking at the return they're getting on assets. And nobody looks at those. And profit margins, nobody cares. And free cash flow, we used to look at that to make sure they had enough money so they could buy their debt down. Nobody looks at fundamentals anymore because they don't drive the stock market with fundamentals anymore. Not since 2008 when they went to QE. So we went from price discovery to price accommodation. What's that mean? Where the Federal Reserve sets the price in the morning. Like I said, ever notice the market's down like 400 points? You wake up the next morning, you look at it, it says implied open up 35, 65. How the hell do we go from closing the market down 500 and then the next morning it says implied open 35 or 65 points? They rig it by buying futures, index futures. So again, don't listen to them. No longer is this market driven by fundamentals. No longer is it driven by price discovery. We took price discovery, threw it out, and put in price accommodation. That's right. And now we instead of fundamentals, It's money leverage. That's what drives the money. They printed $27 trillion. This is Obama. He started out with it. They printed $27 trillion between 2009 and 2011. $27 trillion to go buy treasuries to bring interest rates down to zero to drive the market higher. Are you nuts? So what drives the market is leverage, money leverage. What drives the market, okay, again, is discovery. No. Is price accommodation. So they're lying through their teeth. So it's money. That's what drives the market, okay? And so when that market started to drop, let me go back here. When NVIDIA broke down right there on June 20th, I think it was, and then the S&P, then go look at what happened to S&P on June 20th. Go look at June 20th, the S&P, right here. The S&P started to break out on here, wait a minute, where the hell I got this? Let me get the right number here. I'm going too fast. Okay, NVIDIA right here. Okay, NVIDIA started to break down on June 20th. Now we go to the S&P. And let me find June 20th on the S&P. Okay, June 20th, the S&P right here. July, right here. Okay, May, June. Okay, so June 20th, we started to have a rally right here in June. Right here, June 20th, we started to rally the market. Okay, they started to rally the market again. We're going to cut rates. And then what happened is July 16th, it was over. July 16th, it was over. Because why? Because no longer was it NVIDIA leading the market. No longer. It was over. The tech stocks no longer, after 15 years, was leading the market. What was leading the market? We went to economy stocks, financials, materials, utilities, those sectors. And nobody wanted those sectors. So what happened? They went back on the 24th of July by the tech stocks. That wasn't going to work because, again, it was over for tech stocks, okay? And then that's when we started to crash. That was on July 31. And then, of course, we had the 2,000-point drop. Now they're trying to say, oh, everything's fine again, and we're going to rally. No, that's not going to happen. So again, QE, remember, is a confidence game. And they're going to try to tell us right now they're going to go back to zero rates. Listen to what they're going to tell you. We're going to go back to QE zero rates. That's another bull-faced lie. They can't. It's impossible. Why? Because they won't tell you this. But the truth is, we went from a recession, we graduated, and now we're in stagflation. So the difference between recession and stagflation is the same thing. Both are the same, except when you hit stagflation, it accelerates. So when you have bad labor numbers, okay, and you have a slow economy, everything just triples. Everything gets worse. In other words, the only difference between a stagflation and recession, everything gets much worse. That's the problem. And then the problem becomes you can't, because inflation continues to go up. So when you hit in stagflation, everything gets worse, but you can't go back to zero rates because inflation starts going up on necessities. Exactly what's happening to us right now, okay? Things are getting worse. Jobs are getting worse, right? But now what's happening is they're in trouble because they can't cut rates. They can't go back to zero interest rates, okay? Because if you take a look at necessities, everything is going up. Groceries are still going up. Gasoline's still going up. All necessities are still going up. So we're screwed now that we are in stagflation, but they won't admit it. They'll continue to say, oh, we're going to go back to zero rates, okay? And they won't admit it. They can't, because we went from recession to stagflation. I mean, it's just amazing how they've been getting away with this, but now they're not getting away with it. See, nobody's bigger than the market. Nobody's bigger than the market. And I've been telling, how many times have I told people this was going to happen, and everybody get mad at not my gang members. They knew I was right. But people who weren't my gang members, I'll give it. He doesn't know what he's talking about. Market's never going to crash. It's different this time. Yeah? What happened? This is just the beginning. So what's going to happen now? You're going to see the market again, we're going to be rallying between, I would say, between that, the low of around, I don't know, probably around 504, okay, on the S&P, and probably around 552. We're going to be in that range between now and Election Day. So we're just going to be going back and forth, and then finally this thing will collapse. Let me see if I can get you that chart. Hold on one second. Let's see if I can get you that chart right here, and I can show you. All right, let's see. There it is, right. I think I got it right here. Yeah, right here. Okay. So we rallied off the 9% drop. We're now we're heading up, and we're going to stop, and we're going to form our third lower high, which means we are in a downtrend. Can you see it on my chart here? See that downtrend right there? That's called the downtrend. We got a high, pulled back, rallied, couldn't make another new high, stopped, pull back 2,000 points. Then they tried to rally on this foolishness. Oh, gee, things are a lot better this week than last week. Less people are asking for unemployment checks. Are you nuts? So it's going to rally, and it's going to end up somewhere. We're going to end up somewhere between, let's say, I don't know, probably let's say 535. Okay, and probably 535, and let's say 550, somewhere in that area. So we're going to be going in that. We're going to be getting bounced back and forth. So we will not hit this 30% until either right before the election day, or we're going to hit it after the election day. So my guess right now is, and I'll give you the best guess I can give you right here. Hold on one second. And this is from experience, okay? These guys, they drive you crazy. They just get up there and they lie and they don't care. So we are going to go from, let's take 510. Let's say 510 is going to be probably the 510 is going to be our low, okay? And then our high is going to be somewhere around maybe about 555. That's it. So we're not going to make a new high, is my point. We are not going to break out, make a new high, and we're not going to break down and drop below that 13% and go down to 30% until, as I said, during this, almost towards the election day, and then or after the election. Then we're just going to collapse. Okay. All right. So let's look at, and that's the truth. That's what's going to happen. And every time I said something like this, 2 weeks ago, here's what I said. Everybody said that the market will never come down again. Never come down again. And how many times have I said, I get a lot of hate mails when I say the market is going to correct. Oh, yeah, you won't believe the hate mail I get from non-gang members. You're wrong. Like they take it personal when I tell them the market's going to crash. I mean, like I'm the witch from Salem and they're going to burn me, I mean, it's unbelievable. But guess what happened, right? Who was right? That's right, I was. Okay, so let me just go back to here. So again, as I said, be careful what we wish for, okay? And everybody's hoping, okay, that we're going to get an emergency rate cut. That's the last thing you want. I'll tell you why when I get back after this break. Join my gang, free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to